you for watching this week's Hot Property Online. My name is Christian Harris. We're constantly talking about different products and rates. When it comes to products, we're always talking about fixed versus variable. So fixed rate means your rate is guaranteed for a certain amount of time period, which is your term. So if you take a 5-year term, you're guaranteed that your rate will not go up or down, that it's set for 5 years. Canadians like this because by nature Canadians were conservative. People for a budgeting purpose want to know that their payments are not going to go up on them. It's not going to fluctuate. They know exactly what they have to pay for the next 5 years. The drawback to that is if you're in a 5-year fix with a major bank, you could run into, if you go to break it early on in the mortgage or even halfway through, a very high penalty because they charge an interest rate differential which is based on essentially how much time you have left in your mortgage. It's not just a straight 3 months interest penalty. So the drawback is you could be tied into that lender with no options available to you because of a very high penalty. Variable rate is a rate that fluctuates. It's based on the prime rate. It's actually based on the overnight rate, but most people look at the prime rate and it fluctuates based on if and when the prime rate moves up or down. That prime rate is a rate that doesn't move every day. Typically the Bank of Canada meets. It's during that meeting that they'll decide whether they're going to increase it, decrease it, or leave it alone. Typically they only increase it by 0.25% of the time. They don't jump it up by 75 or 100 basis points. It'll be a 25 basis point increase and or decrease if they move it. A lot of times they don't do anything with the rate. In the last 9 years, we've probably seen 4 or 5 increases and decreases in total. The benefit of the variable rate is that if the prime rate is going down, your rate will go down. So you're not locked into one rate. You get to enjoy a lower rate and a lower payment if rates go. An advantage of the variable is your penalty to break is only 3 months. It can't, run into huge interest rate differentials. But you do run the risk of your payment going up. There is some variable products out there where they can cap your payment from going up, but most of the products out there, basically your payment will keep going up if rates go up, and they continue. If they go down, they'll adjust them downward. And historically, a lot of our clients end up taking variable simply because of the rate difference between fixed and variable at that time. Long term suggests you're better off taking a variable, but that's just history. It doesn't tell you what's going to happen in the future. Right now we're in very interesting times. We're seeing more clients opt in for 5-year fixed money than they are variable. Why? Simply put, fixed money is lower than the variable, which doesn't often happen. We're seeing a lot of our clients who naturally look at rate first, say, oh, the 5-year fixed is cheaper, I'm going to go with that. Nothing wrong with that. Just understand that penalties to break a 5-year fixed with the major banks are very expensive. So what does that mean? Well, it kind of handcuffs you to that lender. Again, with a variable, you're only subject to a 3-month interest penalty. So you have to take a look at both products and not just the rate. We always stress that. It's not just about the rate, it's about features of that product. With the variable rate, you can also lock it into a fixed at any time. Maybe the prime's going to go down more and you can end up getting a better 5-year rate. Maybe the 5-year fixed rates are going to continue to go down. You can lock it into a better rate. But for sure, the breakage penalty is a lot more flexible and reasonable on a variable rather than a 5-year fix. So again, 5 years is a long time. You don't know what's going to happen. Great to get a low rate, but you should always understand the product and the other features behind that rate before you decide. Thank you.